Can you retire exclusively with crypto? Retirement planning is complicated, but the perfect investments can help you increase your savings. One of the most well-liked investments in 2021 was cryptocurrency. This year has seen price declines for the majority of cryptocurrencies, making it possible that buying is now more cost-effective. You may potentially make a lot of money by investing today if prices eventually rise. But how risk-free is investing in cryptocurrency for retirement? Is it possible to retire with only cryptocurrency, despite the fact that some investors have made millions literally overnight? In today's video, we'll talk whether or not you should rely on cryptocurrency for your retirement funds. Many investors are pouring money into cryptocurrency, with the younger generation making up the majority. In fact, more than 25% of them have so much faith in cryptocurrencies like Bitcoin, Ethereum, and the rest that they're putting their retirement savings on portfolios that are virtually exclusively comprised of cryptocurrencies. Nearly half, 45% of people age 18 to 34 who responded to a recent Select and Dynata study said that they have bought cryptocurrency. They account for the largest proportion of cryptocurrency investors, closely followed by 37% of people aged 35 to 44. Only 4% of investors 65 and older and 11% of investors between the ages of 55 and 64 are participating in the digital currency craze. Coins may be bought by investors for a variety of reasons, including the possibility for long-term growth, the desire to cash in on the enthusiasm, or the desire to make a quick profit. However, some young investors are deciding against retirement investments in favor of cryptocurrency. The same poll indicated that only 26% of investors had a 401k or 403b, and only 17% have an IRA, while 44% of investors with less than 10 grand as investable assets are currently investing in cryptocurrencies. While Lindsay Bell, Chief Markets and Money Strategist at Alley Invest, agrees that cryptocurrencies can be entertaining short-term investments, she does not advise losing your retirement savings or investing a significant percentage of your portfolio in them. She thinks that long-term investments should always take precedence over short-term ones. Before allocating short-term fund money, the benefits of a 401k or IRA, including corporate match, should be pursued. But what really is cryptocurrency? Cryptocurrencies are digital assets that can be invested as a speculative investment or used in financial transactions, as investors sought out prospects to make sizable gains quickly. Popular digital assets like Bitcoin, Ethereum, and Dogecoin have grown in popularity in recent years. Blockchain technology, the foundation of cryptocurrencies, uses a public ledger to record and preserve data in a way that is hard to hack or tamper with. Compared to conventional payment systems, cryptocurrencies promise to give users more privacy and security in their daily transactions. Should you include crypto in your retirement fund? Typically, investing in crypto assets is not possible through traditional retirement accounts. You can utilize specialized self-directed individual retirement plans, IRAs, to invest in Bitcoin and other crypto assets, but the restrictions and costs associated with these accounts can be onerous. Therefore, if you're considering it, you'll probably need to invest in cryptocurrency separately from your conventional retirement account. However, it's critical to be aware of the dangers involved. Due to cryptocurrency's high volatility, it is feasible to profit richly in the short term by making well-timed investments in them. However, nobody can predict what will happen in the long run. Given the relative youth of cryptocurrencies and the ongoing market volatility, it's still uncertain how they will operate in the long run as international regulators decide how to regulate them. That's not to imply that cryptocurrencies won't probably still exist in 10 or 20 years. The blockchain technology that underpins cryptocurrency assets and even specific digital currencies have already started to make its way into financial institutions' business strategies. However, compared to other financial instruments like equities, bonds, and mutual funds, digital assets have far higher risks. Your conventional investments are covered by Securities Investor Protection Corporation insurance in the event that your brokerage business collapses. However, if you have a cryptocurrency exchange account, such as a trading or savings account, you have no recourse if the platform and the currency fails. Cryptocurrency is not covered by SIPC insurance, not even when stored in a conventional brokerage account or self-directed IRA. Despite the risk, some people cannot resist the draw of the possible financial benefit from investing in cryptocurrencies. Financial experts advise investing only a tiny portion of your overall portfolio in cryptocurrencies if you're thinking about putting some of your long-term funds there. Before deciding to include crypto assets in your retirement plan, be sure you're fully aware of all the hazards involved. Are there more reliable retirement saving options? There are several financial investments you may make that can offer a more stable return than cryptocurrencies, regardless of whether you have a few years till retirement or decades of work ahead of you. As you consider making adjustments to your investment portfolio, it's crucial to diversify so that you don't have an excessive amount of money in any one item. Purchasing individual stocks, for instance, is a common investment strategy, but focusing exclusively on one company runs the risk of wiping out your retirement savings if the stock of that company falls. Crypto's biggest risk. The fact that purchasing cryptocurrencies is still a speculative investment is the main risk to take into account. It is impossible to predict whether it will still exist in a few decades, and even the most promising cryptocurrencies can fail. This makes it a riskier investment overall and a particularly risky retirement alternative. You could lose everything if all of your savings are invested in cryptocurrencies and they ultimately fail. Here's what to consider. But before we continue, we'd like to ask a few moments of your time. If you want to support us, please leave a like and click on the subscribe button. This would help us create more engaging content for you. Now moving back to where we left off. The desire to join the cryptocurrency craze shouldn't stand in the way of accumulating long-term wealth for retirement, according to Tony Molina, or CPA and product evangelist at Wealthfront, the first robo-advisor to give crypto assets up to 10% of your portfolio. And if your employer matches your 401k contributions, it's even more crucial. But if you're generally enthused about cryptocurrency, saving for retirement doesn't have to mean skipping out on it. According to Molina, he advises contributing at least as much to your 401k as your company will match before considering investing any more money in cryptocurrency. For instance, if your employer matches up to 6% of your pay, put in 6% of your salary so that you double your contribution limit before considering investing elsewhere. I'll advise investors to think of cryptocurrencies as one type of asset class that may incorporate in their long-term wealth-building strategy, continues Molina. Because of the unpredictability and risk involved, cryptocurrency shouldn't necessarily be the major emphasis of your plan, but it can fit within your total portfolio. Investing in cryptocurrencies carries risk. Despite being simple to do using financial apps like PayPal and Square's Cash App, most cryptocurrencies and crypto tokens experience high price volatility, which is why many retail investors view them as a dangerous investment. While it's simple to be carried away by the buzz and possible rapid gratification of cryptocurrencies or other popular asset classes, Bell advises keeping your feet firmly placed in reality as well. Although these assets are becoming increasingly common, their future growth and regulation are still questionable because of their high volatility. You can open an account with a traditional broker or cryptocurrency exchange and allocate some of your budget to your cryptocurrency investments if you're interested in using Bitcoin investments to improve your retirement savings. But make sure it just makes up a minor fraction of your overall investing plan. Once more, while cryptocurrency does have a high potential for quick gains, there is also a substantial chance of steep losses. Long-term reliability as an investment vehicle is still up for debate. Above and beyond all things, it's necessary to do due diligence when it comes to your retirement and long-term investment, to comprehend risks and benefits and develop a plan that works best for you. Consider consulting a financial counselor to choose the best course of action, then follow it. Remember that your financial actions today will determine how you manage in the future. Because there are no second chances, make them count. What about you? Will you trust your retirement and future to this, what they call the future currency? Let us know in the comment section down below. If you want more content related to this topic, make sure to check out our channel. Take care, and we'll see you in the next video.